Now, it's been 20 years since the NIDF, Nigeria International Debt Fund, was launched in Nigeria. Back then, tracking the U.S. Brady bonds, 30-year Brady bonds that was. It was the first of such mutual funds that was denominated in dollars, listed on the Nigerian Stock Exchange. Now, the fund managers now says the meeting will be held on the 28th of April to get all the note holders to agree to some slight adjustment in the deed of agreement. This document means that the total portfolio, or that NIDF mutual fund, will now be skewed strongly in favor of FGN bonds. That's what we call the Naira-denominated government bonds. Let's talk to Omotunde, who is Robert Omotunde, is one of the investment analysts at Afrinvest, the managers of the NIDF. Robert, good morning, and thanks for joining us.
Good morning, Blessing. Thanks for having me.
Yeah, thank you. Talk to us about this rejigging of the NIDF portfolio.
Okay, thanks, Blessing. As you rightly highlighted, this fund is about 20 years old now. What Afrinvest Asset Management is proposing is to the note holders is a restructuring of, so to speak, the fund. You will recall that in 2010, the underlying asset, which was listed on the name of Nigeria International Debt Fund, 2010, they restructured this fund into mostly Naira instruments. So what we're proposing now is an extraordinary general meeting where note holders are expected to agree to certain resolutions, one of which will be the change in price, more or less the restructuring of the price. You recall that at the initial stage, it was at 1,000 Naira for the unit. So what we are proposing now, if note holders agree to it, will be the unit price of 100 Naira to a unit. And what that implies is that retail investors can now take advantage of the fund, and as against the 1 million Naira which was required to take an advantage of the fund, with 100,000 Naira, then investors will be able to buy into the fund. Then not only that, there has been a proposal, if it is agreed to by note holders, for the investment streams that you can take advantage of. For bonds, we're looking at doing about 60 to 90%, and for money markets, we're looking at about 0.5 to 40%. And of course, for cash, we're looking at an investment not more than 5% at any point in time. So these and other resolutions are what note holders are expected to bid on come April 28th for the extraordinary general meeting.
Robert, in terms of the rebalancing this portfolio bonds, FGN bonds, 60 to 90%, what does that tell about what's the outlook of you analysts and the fund managers are regarding how profitable it is to invest in Nigerian bonds, government bonds?
Yeah, in the interim, if you look at the various macroeconomic challenges that the country is facing, it appears that investment in fixed income securities, particularly bonds, will still be very attractive. If you take out other FX issues, if you're a foreign investor taking advantage of this market, if you're local and you're in here, at the current use, Nigerian bonds are still attractive. If you analyze it across tenors, if you check from term to maturity of less than 1 to as high as close to 20 years, because of the new instrument that we have yields trading at as high as 11.4% on the average. On the extreme, you see about 12.5% on the instruments that are closer to 20 years term to maturity. So on the whole, you could say that bond instruments are still more or less very attractive. And of course, recently we saw what happened when the Monetary Policy Committee decided to hike interest rates by 100 basis points. What that implies is that for bond market, it's a direct transmission. Okay, so you see yields rise by an average of about 150 to 200 basis points. So Nigerian bonds are still very attractive.
Robert, I remember in 1996-97 when the NIDF was launched and introduced. This was for the big boys. If you don't have deep pockets, you wouldn't be able to get an NIDF. I remember that went for several thousands of naira. So it's taken 20 years down the line for you folks to rebalance this and say, look, we need to spread this out to Nigerians. Instead of #1 million naira, I could just bring in 100,000. And in terms of the pricing, instead of the entry point of about 1,000, now it's about 100 naira per unit. That looks like you're targeting the mass market in Nigeria. What does that tell you about how far the fixed income market has come in Nigeria for retail investors? Perhaps they're looking at, look, equity had been consistently disappointing, at least in the last 10 years. This is the time now for retail investors to ask more questions about treasury bills and government bonds.
True. Well, I must say on a lighter note that you've been long enough in the market, 20 years ago. I was not in the market at that time. But to answer the question directly, what we've seen in the equity front is a lot of retail investors have been targeting that market. And if you see in the fixed income end, it appears this is the time that a lot of investors, locals who are retail, are also targeting the fixed income market. You see that the NSE has a platform to trade some of these bonds on a retail basis. And if you analyze across instruments, shorter term and middle term, even long term maturity, you see a lot of funds that are being created to allow retail investors to take advantage of the opportunities within the fixed income space. That is similar to what we are trying to do with the NIDF. Yes, you nailed it by saying that when it was first launched, it was for the big boys. But now we are saying that, yes, retail investors can also take advantage of this market. And the market looks like a market over the long term that will be more or less retail driven. We can't say that for the fixed income market now because we still see a lot of institutional investors driving the market, the PFAs, the banks, and insurance companies. And some HNI individuals are the ones driving the fixed income market, particularly the bonds market now. So, but we would expect that in the near term, as in the medium to long term, as investors continue to take advantage of opportunities within the fixed income space, then we begin to see a lot of retail players within the market.
Okay, Robert Omotunde, that's making the NIDF mutual funds for the people, by the people.
Thank you.
Do have a great day and a great week ahead of you. Robert Omotunde, investment analyst at Afrinvest, the manager of managers of the NIDF.